Get ready, because the news cycle is absolutely electric, and we're diving headfirst into the most impactful updates that you absolutely cannot afford to miss. We've got breakthroughs, we've got strategic shifts, and we've got market movers that are setting the pace. From ambitious delivery targets to crucial financial performance indicators, this episode is packed with insights that will redefine your understanding of the industries shaping our future. Buckle up, because the pace is relentless and the information is critical. Let's get straight into it. First up, a major player in the global automotive scene is pushing the boundaries with an aggressive expansion plan. We're talking about a company setting sights on delivering a staggering number of vehicles in the coming quarter, backed by a strategic overhaul of its production and supply chain. This isn't just about numbers, it's about a bold vision for market dominance and technological advancement. Stay tuned as we break down exactly what this means for the industry and what lies ahead. Next, we're diving into the world of investment and market analysis, highlighting the key companies that are on every retail investor's radar this week. With several major earnings reports on the horizon, we'll identify which stocks are generating the most buzz and why. Understanding these market dynamics is crucial for anyone looking to stay ahead of the curve. Then, we shift our focus to a company that's navigating a complex financial landscape, aiming for a significant turnaround. We'll explore the catalysts driving its growth and how it's positioning itself for future success amidst evolving market conditions. Finally, get ready for a deep dive into the latest financial results from a significant industry force. We'll unpack their performance, dissect the key figures, and analyze the implications for their stakeholders and the broader market. Don't miss a single second. Hit that subscribe button, ring the bell, and let's get started. Ambitious goals set for vehicle deliveries. In a significant announcement that has sent ripples through the automotive industry, Nio Inc. has laid out an aggressive plan for the fourth quarter of 2025, targeting the delivery of an impressive 150,000 vehicles. This ambitious goal translates to an average of 50,000 deliveries per month, a substantial leap aimed at consolidating its market position and driving future growth. This strategic push comes after a period of considerable adjustments to Nio's supply chain and manufacturing operations over the past year or two. The company has been actively cultivating closer relationships with partners who align with Nio's long-term technological vision and development trajectory. This focus on strategic partnerships is crucial for ensuring stability and scalability in its production efforts. Financially, Nio has set clear margin targets for its various brands. The core Nio brand is aiming for a gross margin of 20%, with aspirations to reach 25%. For its new brand, Onvo, the baseline target is a 15% gross margin, with potential for higher figures. The third brand, Firefly, is targeting a gross margin of around 10%. These differentiated margin strategies reflect the company's multi-brand approach to capture a wider market segment. Production capacity is a key focus for Nio's expansion. The Onvo L80 SUV, initially slated for deliveries this year, has been postponed to next year due to production capacity constraints. The company is working diligently with its battery partners to scale up production, aiming to increase Onvo's capacity to 25,000 units per month by the fourth quarter. For the Nio brand, the immediate challenge lies in ramping up production for the all-new ES8's 102K WH battery pack. Firefly's production capacity is projected to reach up to 6,000 units per month at its peak in the fourth quarter. To support its overarching delivery targets, Nio Inc. aims to achieve a monthly production capacity of up to 56,000 vehicles by the fourth quarter. Nio is also focusing on financial discipline, with a fourth quarter break-even target based on non-GAAP measures. The company intends to reduce its selling, general, and administrative (SG&A) expenses to sales ratio to below 10% in the same quarter. Furthermore, Nio is targeting a vehicle margin of 16 to 17% in the fourth quarter to help achieve its break-even goal. Specifically, the L90 and ES8 models are expected to achieve a 20% gross margin by the fourth quarter. To bolster its sales momentum, Nio's multi-brand strategy is expected to drive sales growth starting in the third quarter. The strong sales performance of the Onvo L90 has already provided a significant boost to the Onvo brand, with order intake for the Onvo L60 reaching a new high for the year in August. In terms of infrastructure, Nio has expanded its retail footprint with 176 Nio houses and 416 Nio spaces, alongside 414 Onvo stores. Its service network is robust, comprising 388 service centers and 68 delivery centers. The company also reported significant cost optimization, with its operating loss narrowing by over 30% quarter-on-quarter in the second quarter, indicating a positive trend in financial management. Audience impact. Analysts are closely watching Nio's ability to execute its ambitious production and delivery targets, seeing them as crucial indicators of the company's recovery and future growth prospects. The market is particularly interested in the performance of the new Onvo brand and its impact on Nio's overall profitability. Can Nio meet these incredibly demanding targets and solidify its comeback? We'll break down all the essential details. But first, let's look at how other companies are performing this week. Retail investors' key earnings reports. As the market enters a holiday-shortened week, individual investors are keenly focused on a slate of significant earnings reports from major companies. This period is critical for gauging market sentiment and identifying potential investment opportunities. ElectroDrive news rankings provide essential metrics to help investors navigate these crucial updates. Among the highly anticipated reports, Chinese electric vehicle manufacturer Nio Inc. NYSE Nio released its second quarter results. The company reported a loss of 25 cents per share, which was better than analysts' expectations of a 30-cent loss. However, its revenue for the quarter was $2.65 billion, falling short of the expected $2.76 billion. This mixed performance highlights the ongoing challenges and opportunities within the competitive EV market. In the retail sector, Signet Jewelers Limited, SIG, also reported its earnings before the market opened, drawing attention from investors interested in consumer spending trends. On the technology front, Zscaler Inc. ZS is set to release its fourth quarter results after Tuesday's market close. The company's stock saw a nearly 10% climb in the previous quarter following better-than-expected earnings per share, EPS, indicating strong investor confidence in its performance. Wednesday's pre-market reports will feature two prominent retailers, Macy's Inc. and Dollar Tree Inc. DLTR. Both companies' earnings will offer insights into the health of the brick-and-mortar retail landscape. Following the market close on Wednesday, Figma Inc. FIG is scheduled to report its first earnings since its initial public offering, IPO. Wall Street analysts are projecting earnings of 18 cents per share on revenue of $228.2 million, according to estimates from ElectroDrive News Pro. Several other significant companies will also release their results post-market, including Salesforce Inc. CRM, Hewlett-Packard Enterprise Co., HPE, Credo Technology Group Holding Limited, CRDO, GitLab Inc., GTLB, Asana Inc., ASAN, American Eagle Outfitters Inc., AEO, and C3 AI Inc., AI. Looking towards the end of the week, Broadcom Inc. AVGO is expected to report its earnings after the closing bell on Thursday. Analysts anticipate the semiconductor giant to post earnings of $1.65 per share on revenue of $15.83 billion, underscoring its critical role in the technology supply chain. Thursday's post-market earnings highlights will also include reports from Copart Inc., CPRT, Lululemon Athletica Inc., Lulu, DocuSign Inc., Docu, Samsara Inc., IoT and UiPath Inc., Path. Finally, The Children's Place Inc., PLCE, will conclude the week's reporting cycle with its earnings release after Friday's closing bell. Analysts forecast a loss of 10 cents per share on revenue of $289.58 million for the retailer. Audience impact. Retail investors are actively analyzing these earnings reports to make informed decisions, with discussions on social media platforms buzzing about the performance of Nio, Broadcom, and Figma. The outcomes are expected to influence broader market trends and sector-specific performance. These earnings reports offer a crucial snapshot of corporate health and market sentiment. But what's driving the financial turnaround for one particular company in the EV space? Let's dive into the details. Financial turnaround and growth catalysts in focus. In the dynamic landscape of the electric vehicle industry, understanding the financial health and strategic direction of key players is paramount. This analysis delves into the financial turnaround efforts and growth catalysts for Nio Inc. during its second quarter of 2025, providing a comprehensive look at its operational performance and future outlook. As the company navigates market complexities and pushes for expansion, its financial strategies are under intense scrutiny. Nio Inc. has been actively working to optimize its operations and enhance its financial performance. The company's Q2 2025 earnings call revealed key strategies aimed at achieving profitability and sustainable growth. A significant aspect of Nio's plan involves expanding its product portfolio and production capacity, with a strong emphasis on its multi-brand strategy. The introduction of new models under the Onvo and Firefly brands is intended to capture a broader market segment and diversify revenue streams. The company has set ambitious delivery targets for the upcoming quarters, signaling confidence in its production capabilities and market demand. Key financial metrics from the second quarter highlighted a narrowing operating loss, indicating progress in cost optimization and operational efficiency. Nio is focusing on improving its gross margins across all its brands. The Nio brand aims for a 20-25% gross margin, Onvo targets 15%, and Firefly aims for around 10%. These targets are crucial for the company's path to profitability. Furthermore, Nio is working to reduce its SG&A expenses as a percentage of sales, aiming to bring it below 10% by the fourth quarter of 2025. This focus on cost management is vital for achieving its break-even objectives. The company's supply chain strategy has also undergone significant adjustments, with Nio prioritizing closer relationships with partners who are aligned with its technological vision and long-term development. This strategic alignment is expected to enhance production stability and efficiency. Efforts to increase production capacity for its various models, including the Onvo L80 and the Nio ES8, are underway. The company is collaborating with battery partners to scale up capacity and meet the growing demand for its vehicles. Nio's sales growth is anticipated to be driven by the successful implementation of its multi-brand strategy, with early indicators from the Onvo L90 and L60 models showing positive momentum. The expansion of its retail and service networks, including Nio Houses, Nio Spaces, and Onvo stores, is also a critical component of its growth strategy, aimed at enhancing customer experience and accessibility. Audience impact. Financial analysts and investors are closely monitoring Nio's progress in achieving its delivery targets and margin improvements, viewing these as key indicators of the company's financial turnaround. Public sentiment on social media reflects a cautious optimism, with many anticipating the impact of the new Onvo brand on Nio's market share and profitability. Nio's financial adjustments and growth strategies are certainly making waves, but how do their latest official earnings results stack up against expectations? Let's get into the numbers. Nio Inc. reports Q2 2025 earnings and 6-month results. Nio Inc. has officially released its financial results for the second quarter and the first 6 months ended June 30, 2025. Published on September 2, 2025 at 07:35 am EDT and modified at 08:35 am EDT, these figures provide a crucial update on the electric vehicle manufacturer's performance and its ongoing strategic initiatives. The report details the company's financial standing amidst a competitive market and its efforts to drive growth through innovation and expanded offerings. In the second quarter of 2025, Nio Inc. reported a net loss, a key figure that is being closely examined by investors and analysts. The company's performance metrics reveal the ongoing investments in research and development, production capacity expansion, and market penetration strategies. While the specifics of the earnings per share and revenue figures are detailed in the full report, the announcement itself signals the company's commitment to transparency and regular communication with its stakeholders. The results come at a pivotal time as Nio continues to implement its multi-brand strategy, aiming to capture a larger share of the global electric vehicle market. The 6-month period ending June 30, 2025, also provides a broader perspective on Nio's financial trajectory. This period likely encompasses the ramp-up of production for new models and the expansion of its sales and service networks. The company has been vocal about its efforts to optimize its supply chain and enhance operational efficiencies, which are critical factors for achieving profitability. Nio's focus on technological advancement, including battery technology and autonomous driving capabilities, remains a cornerstone of its long-term vision. Nio's strategic initiatives, such as the development of the Onvo and Firefly brands, are designed to cater to different market segments and price points, thereby broadening the company's customer base. The success of these new ventures is closely tied to Nio's ability to manage production costs and deliver competitive products. The company's financial results for Q2 2025 and the first half of the year will be crucial in assessing the progress of these strategic moves and their impact on the company's overall financial health. Audience impact. The release of Nio's official earnings report is generating significant discussion among investors and automotive enthusiasts. The market is keen to see how the reported figures align with the company's ambitious delivery targets and margin goals, as well as the overall impact on the electric vehicle sector. These official earnings figures provide a concrete look at Nio's performance. But how does this compare to the buzz around retail investor sentiment and other major market movements this week? Let's find out. And that's a wrap on another packed edition of ElectroDrive News. We covered Nio's ambitious delivery targets and strategic supply chain adjustments, the key stocks on retail investors' radar this week, including Nio and Broadcom, Nio Inc.'s efforts in financial turnaround and growth catalysts, and their official Q2 2025 earnings results. Don't miss out on future updates. Make sure you're subscribed, hit that notification bell, leave a comment with your thoughts, and follow us on all our social channels for more exclusive content. We'll see you next time.